Welcome back, everybody, into another daily recap on gold, Bitcoin, and Eurodollar. The usual pairs: gold, Bitcoin, Eurodollar. Wanted to say the 5th of October, not twice about the pairs that you already know. Funny enough, we're going to start with dollar index. I don't talk a lot about it on my daily recaps, on my daily analysis, but it's being very, very important. It's becoming very, very important. As you can see, we were here this morning as we ended up finished the pullback from the previous lows yesterday. We bounced off the price sensitivity area around 93.80, sorry. As you can see, we're bouncing and then very bullish, retesting the previous lows and then coming back into another price sensitivity areas. We want to see price dollar index go above to take further sells on gold, further sells on euro dollar, but we saw exactly as expected as a possibility, price bouncing in, jumping and ranging. It ranged most of the day in a very, very small range between 94 flat, no, not even, 93.80, 93.60, and 93.900. We had some nice bullish with the ISM manufacturing PMI or services. I don't remember the whole batch of reports. We saw another bounce here, retesting those previous highs, and then sorry about this mess, and then we had a very huge rejection. We were ranging, spike up due to the good report, as you can see, but then another opposite rejection, the sell-off, and then back into the range. This was my prediction of the morning to price that there was the real possibility of dollar ranging until we have some more job, labor market, NFP, unemployment figures later during the week. So let's go into gold. Let's dig into it. As you can see, the analysis of the morning, we already had the correction of the inflation spike coming into the morning. As you can see, we already corrected most of it, and I was playing the sell bias. I was bearish, either with a retest of the 1770 or 1764. What actually happened was that it went below to 1761 during New York session, grabbing liquidity, as I shared on my Telegram, grabbing liquidity and then closing with the flip, and then the following candle grab some liquidity and then continue down to retest this high demand area. The following candle did the same, but then London closed as expected as a possibility. We had a bounce of from around 100 pips. As you can see here on the high time frame, how much this is a demand zone. It can be dig deeper until 1747, 1744. If we look on the left hand side on the chart, you cannot see it, but I can. And it's very, very, very important. That's why this was the main reason, not the main reason, one of the reasons why I was expecting this pullback that I'm going to show you on the lower time frame. The other reason is that, as we know, as if you check if you trade the gold, as you can see, when there are some big news coming in at the end of the week, gold always tends to go into a order block on the high time frame, and then breaks above below based on the report only at the actual report or the same day. Anyway, it's something that happens, as you can see here. It's not something that is so unusual. That's why me, a newbie, can expect it. And that's why I'm expecting price to continue in this order block between 1760s, 1770s, and 1747, 1750s until the very strong NFP, unemployment, which will give us break below and or a break on the upside, depending if it's really good, is really bad, or it's decent. In this case, even a decent, very good, or decent will bring the price down. Very, very bad will bring the price up. But let's jump into the 1 minute chart. As you can see, this is the chart that I was using during the my session. So let me just remove those. Okay, and as you can see, we were coming into pre-London, into London with just a range between 1753, 56 price sensitivity areas and 1759.5. I never got my opportunities to enter because, as you can see, even above, we never had a price trending and strongly moving. It's only with New York session, as you can see, that price managed to break below the pre-New York to do a little, at least 20 pips below the price sensitivity area with a retest, and then again another entry, another what's the word? With another impulsive move on the bearish side. Jump. After that, as you can see, price went quickly back into the range, reacted again at these previous highs at the same PSA 1758, which was already charted, as you can see, because it was a price sensitivity area. We have a break and retest during New York session and went to revisit those same exact highs. No clear 1760s, no clear 1764, sorry, ish, 1761, sorry, I'm blind, price sensitivity area, but then we had a nice, very strong rejection. We started having, I think, report, good news, but we started to see a break and retest of 1759, a break and retest of the 1758 PSA, a very aggressive and impulsive break below 1756, some ranging, another retest of this PSA, giving you sort of safer entries with the confirm of New York Stock Exchange opening, and then only below 1751, only 20 pips. So this was here the safer entry. Let me just check if in the analysis I put it as a safest below 1759, because yeah, now here we didn't have this price action price sensitivity area marked up. No, yeah, I didn't put it just visually. But anyway, we saw the confirm below 1756 with the medium risk, high risk, high reward, and safer entry only for 20 pips. After that, what we saw was that yes, we had the confirms around here of the very good, slightly better PMI, but then it's not enough. I mean, the investors, we know that fundamentally they want economy rebounding, labor market, inflation. I mean, it's not just PMI that can bring and break this big demand area that I showed you around this price level. So I started to think, okay, yes, we get a break and retest, we might get it, and we got it for like 30 pips, and then here for 30, I started here. I said, okay, I don't see price going bearish. I mean, it's not that the news that this news that is going to make us going bearish again. Investors are waiting for what news, what reports? The labor market, unemployment, not just a random PMI. And that's why I said here, let me just give me a second, I will show you the message. There you go, this is just the message. So for 30, it might even rebound of 1751 up, maybe at London close. This is my message that I sent for accountability, and this is exactly what happened. You see, London close 5. This is London close, and we got the bearish candle. We were already retesting it. We got the bearish candle making a lower wick, and then what we saw was just straight move up. Breaker retest. I wasn't trading anymore this time, but this was a nice good call, and I'm not just bragging. I'm really happy because let me just do it. Really happy because this is something that I made on my mind. It's not something that someone told me, okay, then usually it happens this. Nope. It's just something that I made on my mind based on what I've learned all the time. All this time. As you can see, then we did 100 pips move, double top, no rejection. 1758 was a very strong resistance. Now is a very strong support, and just price very slowly bouncing off 1759 again, and then just makes the way for around 10 pips more, but then nothing happened, nothing more. This is, I'm very proud of it, of this call. I would have liked to take a sell here. There was a candle setup and it would have been very nice. I had no trading here because we didn't actually move in my time frame from 8 to 10, not ranging. But as you can see, we had many confirms here, didn't take any trade. But this call was very, very good, not because it worked, but because this is something that I saw, and I am kind of good at seeing patterns, and I kind of good at noticing them, that I made up that, okay, yes, price is very bearish because expecting price to bounce off at, when price is so bearish around here, especially after the exhaustion and its highs. It's something I did it because I saw it. I saw gold doing this stuff, not just a London close, but doing it. And if the fundamental reason is there, because there's no fundamental reason now for me for price to break below this demand area. And this what comes it only comes from being on the chart here, being on the chart here, seeing price multiple times failing to break 1760s, 80s, sorry. Being on the chart here, seeing price failing to break 1803. Here, 1781 as well. Look, price failing to break 1781 80s. There was also before this NFP multiple times around here, I think, yeah, 1795. How strong it was. Look, how many times did it bounce from this level as we were expecting it. Look also the trend line, the wedge, and then the good was not NFP, was I think FOMC, very bearish. So very bullish, sorry, bearish for dollar. This is the same that happened today, knowing that what comes at the end of the week, That's why I was expecting this price sensitivity area to hold strength. So this is it for gold. Let's jump into EuroDollar. EuroDollar, today it followed exactly the DXY, the dollar index. Main bias is of course dollar strength, as noticed that the DXY was gaining strength, as you can see here. I was noticing this in this morning, and exactly we were here. This PSA should be already in 9020, yes, should be already here, and we were, as you can see here, very bearish at the time I made my analysis. We were very bearish and expected the possibility of making a double bottom, going back to this area, and then some rejection from these previous highs. Why? Because yes, it's a trend, it's a bearish, but it's not just melting. Price does not just melt without a reason. That's why we had this consolidation period, spike up against the dollar, and then spike down, and then spike up. Let's jump on the 1 minute. As you can see, these are exactly the double bottoms that I noticed and I pre-planned. 10 pips here, same price sensitivity, 13 pips, same, 13 pips, same, 12 pips, same, 20 pips. Today you could have just played the buys. Look how clean they were compared to the sells. Of course, here at the start of the new hourly, we had the I think we had the news. The report was here. I know we had the news of downplaying inflation, which were very bearish, was very good for the dollar. I think was also, yeah, here was this sell-off for gold with multiple entries. This was a nice entry. Of course, this was a much better entry. This is what I wanted to enter. It is what it is. It's fine. Would have been a nice from here 80 pips, but it is what it is. Yes, close. As you can see here, multiple times, double bottom. There you go. As you can see, very clear. Double bottom at the PSA. You enter when you see rejection. Yes, was not strong volume. We were just at pre-London open. You get your 10 pips, even 9, because it's still 3 pips stop loss and 9 take profit. Then here we have a bounce exactly on the dot, this charted PSA, and then you get much better with volume, London volume, much better buys. Then same, bouncing exactly again at the same PSA, and move up, reacting exactly at the same area. Look at the top here, how we played as a whole. Then of course we have some more rejection. You know, I mean, you see, if you take the sells, you have to be aware that price is not necessarily coming back to the PSA. Again, here, break and retest. Again, you would have put buy limit every time, almost every time, and would have won. You can see multiple reactions here in this PSA. And then, as I told you, the very good news for the dollar, downplaying the inflation. exactly at the new 4-hourly candle after making a top week. Then just doing doing the New York Stock Exchange, we had some minor because following exactly the dollar, we saw some bearish move when the dollar was spiking up, but then we just saw again going back to the range. Reacting again this PSA, and again break and retest, this time moving much better, following the dollar index opposite, when the dollar index was very bearish. And after that, we just went into some lower volume. Yes, move, last reaction here, and then break below. This is still 10 pips, should be. Yeah, 10 pips. As you can see, follow exactly the dollar index. Let's jump on Bitcoin. Our last pair, this one, okay. So we were coming here. We were reacting at the top of the order block yesterday. The order block was here. We broke above, and we were expecting either a deeper pullback or a pullback and bounce up, or directly break and retest of this PSA. And this is exactly what happened. This exact pathway, as you can see. Exactly here from 9, what you see is exactly this move. Yes, on the 1 minute is much less clear, but as you can see, bouncing from PPLs to PPL just went up. Look, 49,500 up, very whipsawing, yet another retest of the PPL, break and retest of the PPL, and move up, double top, failing to make new highs at the PPL, 50 to 50, with rejection, pullback, safer entries. Now you should be able to see them at the price point. As you can see, failure to break, rejection at these previous price points, break and retest of the PPL, 25 pips scalp, then bounce again of the PSA because the main bias is bullish. Yes, we still fail in New York to make new highs. Yes, but we are making new lows. No. So the bias is intact, break and retest of 50, and then again reaction these previous highs. Exactly. Failure to make new highs, break and retest of PPL, and then go down. Did we make new highs, lows, or we reacted exactly the same PSA? Reacted at the same PSA, and the main bias is still bullish. What we made was that, on the block, that. It's easy. There you go, failing to make new highs, another pullback, another failure to make new lows, and then just chugging away above 50 to 50 again, and then just making new high 50, 70, 50. As you can see, it's not much clear, but if I just do this, bullish trend, order block, liquidity grab, multiple liquidity grabs, and then just continuation up. If you see it like this, sorry, it's much clearer. Yes, as a scalper, it's not easy when to enter here, maybe I enter here, but the main bias is still valid. So this is it also for Bitcoin. Look how pretty it was. So around 120 pips again. The buys hold from bounce 49,750, which was exactly this PSA 49,750. Look, went even up 49,750. As you can see how big of area it was. 120 pips. Of course, as a scalper, you could have got this 60. Then when you see here, you can still take 60. Here, maybe you can find it and say, okay, double bottom, 45, and the 20. Of course, this is just in theory, but this is what happens. So this is it for today, guys. See you tomorrow.